We're ready? Okay. Good morning, everyone. My name is Stephen Bronson, CEO of Interlink Electronics. We're publicly traded on NASDAQ. Our symbol's LINK. And I'm here to tell you about our rich history in the sensor and printed electronics space, where we're at and where we're going. We're very excited about our business and our future. Our traditional forward-looking statements. Interlink Electronics. We have a very rich history in the sensor printed electronics space. We were founded in 1985. We invented force sensing resistors, which is a type of sensor that detects physical force or pressure. So unlike your Android device, your iPhone, where it's using capacitive, detecting touch, our roots of our business is we're detecting physical force or pressure. So the benefits is the user can wear a glove. You can work in a positive 85C to minus 40C. You could spill liquid on it, and it works in a harsh environment. So that's the roots of the company. And being an early pioneer with success in the sensor printed electronics space, we're leveraging off that rich history and brand and building out a global sensor printed electronics organization. So off of that rich history, we have very successful track record of delivering in high volume sensor. So not just our force pressure. I'm going to talk about our expanded portfolio shortly. But for example, we in 2012 launched a piezo sensor, which is a cousin technology of our force sensing technology. And that was utilized by Tesla for the first 5.5 years in the Model S. So we have this rich history of executing, delivering for large OEMs. And part of our strategy, leveraging off of that force sensing roots, is to expand through acquisitions and additional organic growth. We're fully vertically integrated. So today, our footprint, we're headquarters in Fremont, California, Silicon Valley. We have footprints China, Scotland, Japan, and 2 footprints in California. We're big on being fully integrated. So we do everything in-house: firmware, software, prototyping, engineering, manufacturing. And I'll expand on some of the capabilities on the manufacturing. And like any technology company, our IP is golden. So we have 49 patents, 14 pending. And today, our team stands just slightly over 100 team members spread out into the footprints I previously described. If you think about our business today, I like to use the analogy that we're the picks and shovels of the gold rush in data analytics and AI. Because without sensors to capture that information, you're not going to have the data to process. And not only emphasizing our fully integrated organization, but in 22, we kicked off a campaign to pursue accelerated growth through acquisitions. And to date, we acquired 4 companies in the last just plus a little over 2 years. I touched on our history. The company initially went public in '96 before my time. 2012, we launched the first piezo sensor that was used in the automotive application of Tesla. We also launched the first resistive touchpad, multi-touchpad that was adopted by Panasonic and all their fully rugged Toughbook models. And it goes to the advantages that I described earlier. The user could be wearing a glove, so the Panasonic Toughbook is mostly used by military and law enforcement. And so you have to be able to perform in a harsh environment. And what was a real success in that program is we replaced a Japanese supplier to a Japanese OEM, and they're very rigorous, so you really have to have the goods to accomplish that. There was a period we delisted. We weren't using our currency. We relisted on NASDAQ in 2020. We launched at the end of 21 our strategy to leverage our rich history and to embark on an acquisition program. We acquired 2 related businesses in December of 22, KWJ Engineering and Spec Sensors. Everything we do is related around printed electronics. So here's a carbon monoxide sensor, and the core principles, whether it's a force sensor, a gas sensor, is based on printed electronics. And before some of you joined the presentation, I went up to Ben, right? And I never met Ben before. And I showed him a seat cushion with no wires, and I plugged in a battery pack, and I said, let's give it 30 seconds. And with our latest edition on the smart textiles, it heated up, and I'm gonna ask this nice gentleman to confirm that the surface is still warm, hot, okay? We're not gonna cook on this, but it's still heated. And again, this is smart textiles. So I'm very excited, and this was the latest acquisition, Conductive Transfers, in December, about 4 months ago. And prior to that, in March of 23, we acquired Kalman Technology in Scotland that makes membrane keypads, printed electronics. In addition to adding an expanded portfolio, revenues and earnings to our organization, it added an additional manufacturing footprint. Well, in today's environment, that's important. That same process to produce membrane keypads is identical to how we produce force sensing resistors. So now we're also incorporating manufacturing of force sensing into our Scotland footprint. Benefits of M&A. First and foremost, you have to be disciplined. You have to make sure it fits with your technology roadmap. And you also have to look at the value proposition. I think a lot of people or organizations get involved in M&A and they think it's going to be the cure for their organization, but you have to have a strong foundation. And prior to embarking on our M&A strategy, we invested in our human capital and added very strong team members. So we have a very diverse, seasoned team at the senior level and in the trenches to support the M&A activities. What does it do? It gives us broader product portfolio. We also, when we go through the process of becoming an approved technology provider to organizations like Panasonic, Siemens, we're able to now introduce these other technologies into our key accounts. We also add in each of these acquisitions, unlike a multinational that's going in and stripping out the IP, we keep the core team in place because that talent, that engineering pool adds a lot of value. In addition, we have that cross-selling opportunities. So today, we acquired CT not even 4 months ago, and we're already introducing it to accounts and relationships that Interlink has had for years. And where they had limited resources, now that they're part of Interlink rich history, we can demonstrate that we delivered on high volume with Fortune 500 customers. So it gives more credibility to go after those bigger relationships. So I touched on the benefits and the conductive transfers, but also with the gas sensing. So Spec, KWJ, and again, we do some really interesting stuff, was really a guru of electrochemistry, gas, environmental, air quality sensing. So here's one with 4 different sensors in it that's detecting 4 different gases, which we developed in a government grant to detect the air quality being impacted by wildfires. So in essence, it could act as an early detection system. And now we're leveraging the development of that paid by the initial prototype paid by the government in building out a commercial platform around that. And Spec KWJ, prior to us acquiring them, had a 25-year history in the MEMS gas sensing with a very good reputation, but a very small company and not managed efficiently. So the owner or the co-founder that was still involved in the company was the technologist looking to retire, but in place of the business, there was individuals put that weren't optimizing the business. So shortly after acquiring it, we kept the core team in place, but we added different individuals who bought a wealth of experience and knowledge. And we took that business, even though we were investing over $1 million a year the last 2 years, we improved the margins from the low teens to about the mid-30s. And our goal in any business unit is to get it to 50% or better, which is our historical track record. I talked about our global footprint. Again, California, we have our headquarters in Fremont. We have a small R&D footprint in Camarillo, which is an hour north of LA. And we actually have a finance team in Irvine. And then in the UK, we have in Irvine, Scotland, which is about 30 minutes south of Glasgow, our footprint there, which was the Kalman footprint. In China, we have our high volume manufacturing and sustainable engineer. We set that up from scratch. It's our footprint. It's been in place since 2006. Today, it's a little challenging. Luckily, it supports the European and Asian sales, but there is a small piece, about $2 million in revenues, that comes into the US. And latest news is now going to back down the tariffs, but we pass those tariffs costs through the customers. You don't want to do that it's not sustainable. So we're glad to hear that the direction is changing. We're in a great market. Today, we're roughly, our market as a whole, sensors, printed electronics, flexible sensors, is an $11 billion market. We don't capture all of that $11 billion. We play in different pieces. One subcategory is about a $400 million market. This is a market that's expected to double in the next 10 years. I touched on our portfolio. So conductive transfers on the wearables and the smart textiles. We can print on any textile, whether it's leather, you name it. We can print heating elements, electrodes that would create stimulation, which was a successful deployment of our technology prior to us acquiring CT. They successfully incorporated it into smart shorts that were dealing with women with incontinence issues. The smart shorts, using our CT process, created a stimulation to help alleviate that issue. We have a diverse group of customers. This is some of our current and past customers. So we have that rich history. Again, we're patent protected. We keep some of our institutional knowledge. We don't file patents because it would open up the world to our secret recipe on some of our ink formulations. And having the advantages of being fully vertically integrated, we do a ring force sensor that's used in ventilators. So during COVID, when our customer, Philips Medical, came to us and said in 60 days, we need you to increase the production by threefold, we were able to do that because we were in control of our destiny. Global scale and infrastructure, I touched on that. We have a track record with dealing with not only blue chips, but very, very exciting growth technology companies. And our knowledge base internally is very valuable. So we were on the right trajectory. We did have one blip last year. So even though I'm telling you all the positive, I don't hide the one blip. Last year, we were on track to do year over year increase in revenues. We had some of our large force sensing customers, nothing to do with our technology, but their business was impacted for different reasons. One was a large medical customer that got acquired by Siemens. They went from carrying about a year buffer stock to just-in-time inventory, 30 days. They also, just prior to that, moved their manufacturing from California to Mexico. And talk about the crazy world we're in. 2 weeks ago, they announced to us that they're moving it back to California. So that was part of the drop last year. And we had two other sensing customers. One, coming out of COVID, really built up an enormous amount of buffer stock. Excluding that, we were heading in the right trajectory. We also believe a majority of those revenues will come back, and they'll come back on a normalized basis. And just to give you an example, a large medical customer typically is a $2 million a year business. In 23, they did $3 million in revenue. Last year, they did 1.5. So having a 1.5 drop in 1 year wasn't the best outcome. But we're confident that we're going to move forward and start delivering organic growth without any additional acquisitions. To date, we've been able to make a lot of strategic investments with cash on hand. And all 4 small acquisitions we did, we paid cash with the cash on hand. We're very shareholder friendly, and I'll touch on that in a second. So to reinforce our growth story, we're going to drive growth both organically and inorganic. So we're going to continue to be opportunistic where we see opportunities to expand our technology portfolio in-house and also to do additional acquisitions. Our industry is very fragmented. There are a lot of great companies out there, and they range from $3 million to $50 million in revenues and profitable. And there is nobody that we're aware of on the scope of looking at the broader sensor printed electronics space and consolidating the industry, and we think we're very well positioned to do that. Again, our goal is in the next 5 years to reach $100 million in revenues, and historically, if you exclude the last 2 years, our company has been operating at north of a 50% gross margin. So what we do is not commoditize. A lot of times people think the word of electronics is components. That's not Interlink. I like to keep things simple, so I'm a big fan on history. Measurement Specialties was a publicly traded company. They did exactly what we were doing today, where they focus on acquiring sensor and sensor material companies. And when they got their M&A model really perfected from 2009 to 2014, they averaged 5 acquisitions a year. The stock went from under $4. They were eventually acquired in 2014 by TE Connectivity for $88 a share. Myself, I have over 40 years of operational entrepreneurial finance experience. I started my career on Wall Street at a very early age and transferred into doing turnarounds and doing it successfully. The first public technology turnaround I got involved, Micron Instruments, which is an infrared technology company. I bought out one of the co-founders, went in, took the company from a loss to profitability in a year, put together a team. 6 years later, we sold it for 11x of our original investment. Fast forward, I've done this for Interlink and Qualstar, where there were companies that were good technology companies, losing money, didn't have the long-term strategic. When I took over Interlink, they were losing a few $1 million a year and had sub $5 million in revenue. So we really are committed to execution, and I'm the largest shareholder and investor in Interlink. So I've invested millions of my own money into the company. So my interest is aligned with everybody in this room. Ryan Hoffman is our CFO, brings a wealth of knowledge before joining Interlink, joined us with 20 years of history with 2 firms. He was a partner in RMS for 16 years, and then prior to that, he was with E&Y for 4. Key takeaways. We're building around this data analytics, AI evolution. We feel we're in a perfect position with expanding our sensor portfolios. It's the picks and shovels in the space. We're also proven to execute, and we're going to drive growth, not just organically, but also through acquisitions. And what we do is scalable. So we don't give up our rights to our technology. We sell it as a solution, so it's reoccurring revenue. We are, with conductive transfers, because of our proprietary process, we would look at royalty arrangements, but again, it's traditionally non-exclusive. If somebody wants an exclusive period, it's for a short period of time tied to financial metrics. So we don't give the house away. That's an overview. I just want to discuss trends. I got 5 minutes left. So I'm going to touch on our different business segments because the trends are favorable within each group that we play. But some of the takeaways, air quality, everybody knows that's valuable today. Whether it's wildfires or pollution, you're going to need systems, smart systems. that detects that. So one of our customers, we deliver a methane sensor, but we also do the intelligence behind it, the electronics, and they're highly calibrated. And that customer uses it to detect methane leakage at oil and gas drilling sites. So if there's going to be a bigger headache, they know in advance. Industrial, automotive, and also food safety. If you can detect the level of ozone within produce storage, you can extend the life of the produce. So there's a lot of areas that we don't think about in our everyday life that sensors are playing a role. Besides our kitchen appliances, and it seems like the sensor or something goes wrong after the warranty expires. Luckily, that's not the case with Interlink Electronic sensors. Here's the line of our current gas sensors. Here's some of the applications. So we also do an alcohol sensor for a customer that we designed a wearable. So this is all done in-house. So not only do we sell the sensor, but we can build your solution. I touched on the rugged touchpad solution, which we sell to not just Panasonic, but several of the other large leading notebook manufacturers. This is a niche market. Varian Medical, which was acquired by Siemens, has been a customer of ours since 1990. This basically acts as a collision detection system. So when the patient is getting treatment for radiation, our force sensing elements on the bumper that presses against the patient. So if the patient was to move, it detects that force or pressure. So it's another tool for the technician to adjust during the treatment, which is important. And not only selling the force sensing, because we're fully integrated, we took out 4 other suppliers and we deliver our sensing element on the part that plugs into the machine. We talk about the medical, prosthetics, robotics, all this detecting pressure. So whether a robotic foot, what type of pressure is being applied, the robotic hand, you don't want a hand to crush you. So you need to know the force. Jumping to CT, these are some of the different areas that our technology is applied. And I'm going to simplify. What we do is within if you think about it like a decal, we're able to print the electrodes within the decal. So it's a conductive transfer. We can peel and apply the decal that has the element that detects the heat. So all I need is a power source to connect to the wire. And before everybody joined us, I showed a couple participants. This wasn't plugged in. We plugged it in, and now it's warm. And it took maybe 30 seconds, Ben, initially. So again, what we do, I think, has a lot of applications. We're very excited about the CT edition. I talked about the smart shorts, where not only did they get a nice upfront royalty payment, but today we sold over 145,000, and we expect the next gen of this product, which was delayed, not because of us, to be rolled out in the next 12 months. So we're excited because we feel there's going to be some good volume and revenue off of that program. It was also used to create stimulation. Think of it like a stim machine. And on a patient that couldn't walk, they claim, but our customer, that helped the person walk who hasn't walked for years. So what we do has everyday practical applications, and it also has some very neat advanced generation. Any questions? So how cyclical is our industry is the question. So because we're not tied to one vertical, we don't have all our eggs in one basket. So some of our customers at time will have certain cyclical patterns, but in general, as an organization, we're diversified. So we're really not subject to a cyclical nature. Any other questions? Thank you, everyone, for participating. Appreciate it.